welcome all. I think this is the nth year. I think somebody like Mr. Narayan can tell me how many years I have come for. I missed only one or two. So that has been one of the things that Senthil told me in November. So immediately I put it into my calendar that I cannot miss this. So I would say that it has always been enjoyable actually to talk in IFA Galaxy. Although I will always 2025 IFA Galaxy talk I will never forget. So in my life, I think I will never forget 2025 IFA Galaxy talk. So it is something, in the last 4 months, at least 40 people have called me, be careful when you're making the next talk in IFA Galaxy. So it is something, I have been so scared preparing for this talk because 2025 talk is sitting in front of me. So yesterday my wife told me, please be careful. So I told her, what do you mean by that? So that is the beauty. So and this time's topic is also very, very high funda. So at a time they have put some growth intelligence where logics meets emotion in smart allocation. So normally you have some very simple topics, maybe because artificial intelligence has come, the IFA Galaxy organizing team wanted also a high funda topic. So I actually like the topic, except that instead of emotion, actually what has actually been interesting is behavioral finance, temperament, everything is part of emotional intelligence. And over the many years that we have seen, frankly, if you ask me, and Warren Buffett and both Charlie Munger have said that what matters is not intelligence, what matters is temperament, which means that your topic is very relevant, that whatever you do, it doesn't really work because at the end of the day, temperament is more important than artificial intelligence. And actually we learned this in 90s, frankly. In 90s we all thought that we can, because of our knowledge, we'll make money. Then 94 to 98 we actually got jacked, very badly jacked. So after that we realized that this whole process of trying to do this whole concept of trying to have only one type of intelligence doesn't work. And we had not read books at that point of time of Warren Buffett or any of these people at that point of time. So we only knew we had made mistakes without knowing why we had made mistakes, etc. So I think essentially what the 27, 28 years that ICICI Mutual Fund has been in existence, the reality has been that growth intelligence is less important than emotional intelligence. Because in 99-2000 we launched a technology fund and collected a lot of money, and that experience was not good for ICICI Mutual Fund. And even in 2007 we could not avoid collecting a lot of money in infrastructure fund. So what we realized after both these experiences of 1999 and 2007 was that basically in investing more than growth intelligence, this whole concept of behavioral finance, emotional intelligence, temperament is more important. So way back in 2010-11, we actually made a pivot, and we said that returns don't matter. And at that point of time, sales was very worried. Because see, end of the day, no one would have believed at that point of time that a product like balanced advantage or multi-asset categories, these all can be made very big. And we pivoted that and said this kind of category actually, which is based on emotional intelligence and will actually give investors a very, very good experience rather than an infrastructure fund or a technology fund. And that pivot that we did in 2010-11, which is long, long back, actually helped, in my opinion, the industry. And yesterday I was talking to a few people from Chennai, and they agreed that that pivot has helped not only ICICI, it has helped the industry, it has helped MFDs, it has helped everybody. Have people moved out of that? The answer is no. So if you look at this chart, you will find that in 2023, we gave a call on silver. And at that point of time, what was the inflow in silver? It was 700 crores for the industry. The call on gold, the inflow in January 2024 was 650 crores. What was the inflow in the month of January 2026? It was 24,000 crores and it was 9,400 crores in silver. What was the price of gold and silver in 2024? It was very, very attractive, but no money came. And if you look at it, this is the first month ever in mutual fund history that gold inflow, it seems, is equal to equity inflow. You can have this number, but so if you look at it, emotional intelligence is still not working, because how come in the month where gold and silver went ballistic, the gold and silver inflow turned out to be so high, whereas go back 2 years back, the gold and silver inflow was so low. And so this problem is not resolved, actually. And that was what the data of last month showed. And that is something which we felt bad about, because in 2023, we actually launched the silver ETF and tried to popularize. So the reality is that whether it is 2020, you look at December 2020, you look at what was 2-year return of small cap, it was 8%, and the net inflow was negative in 2020. Whereas if you look at 2024 month, you look at 2-year return of small cap, it was very high, and the inflow was high. So nothing can be done, frankly. So while there is a person called James Montier, whom I have read a lot and used in my career. So he said that basically it is the product that you have to improve. You cannot make use of you cannot succeed in any other way. So he said that actually whatever you do, you have to try to create unconstrained funds. And you have to create funds which are unconstrained. You will not be able to change this behavior. So you try to create unconstrained funds, and you create funds which can actually do all these things over a period of time. And so if you want, what is unconstrained is not narrow, not gold, not silver, not small cap, not mid cap, not FMCG, not banking, not technology, not pharma. So I'm sure in the next 1 year or so, there will be an artificial intelligence fund. So I'm saying that, so what happens is when you launch that narrow scheme and you popularize that narrow scheme and you start spending a lot of energy on that narrow scheme, then you are in trouble. That is what he says. So can you popularize a business cycle category because it is not narrow? Can you popularize a value? Can you popularize a special situation? Yes, because these are not narrow categories. Can you popularize a flexi cap? Certainly, because these are not narrow categories. But if you do that for narrow category, and I'm sure there will be an artificial intelligence fund, then the challenge is then you will get money at the wrong time, you lose money at the wrong time. I don't deny that a small percentage of investors will gain. That small percentage of investors will not be everyone in this room. There would have been people who invested in infrastructure in 2005 and got out lock, stock and barrel in 2007. There will be people who invested in technology in 1997 and got out in 1999. Such people will exist, but such people will not be large, and that is the reality of the situation. And that is why you will have to focus your energy on unconstrained funds only and not focus your energy on constrained funds like gold, silver, small cap, mid cap, banking, pharma. We may launch the fund. We will definitely launch ETFs which are even narrower, but that cannot be your bread and butter. It can be for that narrow segment of your customers who know how to buy and how to sell. So if the person does not know, like I have in past experiences told, investing is buying, sizing, selling. The person who doesn't know how to sell should not be invested in narrow schemes. And that is the reality. So where are we in the marketplace? It is actually, everything is expensive. At one point of time, we used to think large cap is very cheap compared to mid cap and small cap. Today, everything is expensive. Nothing is cheap, and that is the reality. What is, if you look at large cap market cap to GDP, it is also costly. Mid cap market cap to GDP is even more costly. It is the costliest. Even small cap market cap to GDP is also costly, except that it is much cheaper than what it was in 2024. Which is the reason we opened a fund, not that we like small cap in a big way. But just that it has fallen from 2024, nothing more than that. But it is not cheap. Nothing is cheap actually. What is most costly? And here we have done work. Silver is a small cap stock. It will behave like a small cap stock. So if any of you are investing in silver, it should be only for thrill. It cannot be an asset class. It is not an asset class. It is a stock. And there are too many people who think it is an asset class. It is not an asset class. Gold at least is an asset class, but silver is not an asset class. So all of you who are investing in silver should know actually you are investing in a stock. When you are investing in a stock, the risks are very, very high. Near term can be very, very good. Long term in a stock is always very risky because you don't know what will happen to a stock. So I would say you have to be very, very careful in silver. Gold is much better. All you need to do is that you have to be very negative on dollar. If you are very negative on dollar, you can invest in gold. Otherwise, it has a role only through multi-asset fund. But if you are very negative on dollar, you can certainly invest in gold. That is what is the framework which we have done after a lot of work. To again reiterate, silver is a small cap stock, not worth an asset class, but it can give you daily thrill for you and your customers. Gold will not give you that much thrill, but it is an asset class to consider if you are anti-dollar. Otherwise, it is worth it as only part of multi-asset funds. That is our clear view at this point of time. Everything gold and silver has outperformed. So from an asset allocation standpoint, it doesn't meet the test because it has done too well. And actually at this point of time, India debt is also not very cheap, because if you compare the difference between US yield and India yield is not, it is pretty low compared to US yield. So that's why even Indian debt is not an attractive asset class. It is okay, it is not great. It is just that no one is investing. That can be the only reason, but it is not an attractive asset class in terms of valuation. And basically, if you look at it, why yields have not gone up, it is only because RBI has kept on buying. Today, for the first time, they have 15 lakh crores RBI has bought of government bonds. And that has never been the case. They have never ever bought 15 lakhs. So, we use this word called quantitative easing. RBI has done 15 lakh crores of quantitative easing for the first time ever. So that is why I would say even debt is okay, nothing great. And as you know, different asset classes have done differently at different points of time. And silver is the asset class, as you can see in the last 2 years, which have done very well. After that, it is gold, and after that, it is office REIT. So we used to be very positive on office REIT. We had bought all the office REITs in our funds, but today we find it very difficult to recommend office REIT also. As you can see in the last 2 years, they have been the third best performing asset class. So it has been very difficult to recommend even office REIT at this point of time, because they have also done too well. So in 2024, it went up 22%. In 2025, it went up 31%. So what can you do? You know, we had this entire definition of market cycle. So this is a cycle which we use over a period of time. We feel that this has been very useful to us to decide what to do in an asset class. We have burst as an asset class when something is gone very badly in the world, which happened in 2020, which happened in 2008. 2002, World Trade Center, Lehman and COVID. Burst is the best time to put money. Too tough for most people. Best time to invest is 6 months after that. Easier time to invest. You'll make very big money in these two cases. Today we are in this boring phase. So where FIs buy, FIs are selling, locals are buying. That time is called boring phase. This phase is a phase where you can make money, but not big. So that is why we always recommend asset allocation. Normally, boring phases can be short, they can be long. This time it's been like almost 1-2 years where we have been talking boring, what to do. But that is a phase where you invest, you can't make big money, unfortunately, but that is the case. Can you lose big money? That also doesn't look like it. In 2024, when we worried about small cap, that was because small cap was not in boring phase. Only large cap was. And that phase continues now. Sooner or later, even small cap after some time will come into boring phase. So everything will come into boring phase. And that is the situation. Can it go to boom phase? Yes, it can go to boom phase. When FIs start buying billions of dollars every month, then it go to boom phase. At that point of time you invest, you lose. You can lose money also. You won't make money then. At least you won't make money. But today is not that situation. Today we are in boring phase. The last phase is bubble. That is happening only in a product like silver. So in bubble phase, what happens? Near-term returns can be very high. And long-term return will be negative in an asset class like silver. Bubble is only in silver, nothing else. That is the kind of thing we are in. So today, if you ask me, there is only one asset class which you have to worry about, that is silver. No other asset class you have to worry. I would say gold is in boom, so which is why it's tough. But as I told you, gold is in boom, and against dollar, you have to think between gold and dollar. That's the thing. As far as equity is concerned, we are comfortable in boring phase actually. This was the point that, which caused me a lot of chaos, but I still said that we have to talk about it. Because the problem was that, everyone thinks, SIP is an asset class which works best. When finally the market asset class delivers huge returns. Today, SIP, even 2-year Nifty TRI returns are very good, but the SIP returns are not that good. Why? Because, for SIP to do well, you need the asset class to do very well. That it has not done. So, SIP as an asset class works very well if you're very positive on the long term in the asset class. And you have to be very positive. Unfortunately, small cap it become very overvalued. That's why SIP was even more dangerous than lump sum, because it's like silver. So now people have started to do SIP in silver. SIP in silver is like SIP in small cap in 2024. The problem is because the short term silver may go anywhere, maybe from 90 yesterday it can go to 150, who knows. But long term SIP in silver is very, very risky, because the point about SIP is, it is the long-term return which matters, and the long-term, if an asset class is overvalued, SIP is more dangerous than lump sum. Because if you do lump sum, if in the near term it delivers return, you can come out. In SIP, you won't. You are invested for the long term. Can you now start SIP? Yes, for the next 5 years or 10 years. But the problem is the 2023 investor, my biggest worry about the 23 and 24 investor is they will last that 5 to 10 years. They last 5 to 10 years, I'm very happy. If they don't, they will have a miserable experience with SIP. That is the challenge actually. So what should people do? I think the best asset class. So, one thing which I've been a bit upset about is that, normally in education, Tamil Nadu has led. And, but when I saw this SIF, when I saw this entire SIF training and the number of people qualified, Tamil Nadu was not leading. And in my opinion, in this entire boring kind of period, SIF would be one of the best products to invest in. And I was very surprised to see that in Tamil Nadu, the number of people who have actually qualified has been very few. I didn't expect that because somehow having grown in Tamil Nadu, always in anything like this, actually they would always be number one. But that didn't happen so far. So I've been troubling Senthil, how did this happen? So I would say that one of the most important things I would say from this entire growth intelligence narrative that you have talked about in this entire conference is that everyone in this room should take even a week of break from making money through customers to doing the SIF exam and pass the SIF exam. So you called it growth intelligence, that is an area definitely to pass SIF exam. Because when I look at SIF, I think it feeds all our requirements. So if we thought that hybrid and asset allocation and multi-asset turned out to be very good for investors, I believe when we think about it, I would say that SIF is equally good, even better, and all of you should actually somehow qualify SIF and make Tamil Nadu the biggest destination for SIF. I think if that Senthil is able to do for us, I would be very, very happy. So I would say that Tamil Nadu should lead in the number of people who have qualified for SIF. And I believe that SIF is just a great way to invest in this kind of market. The 5 products, we have launched 2, Equity X100 and Hybrid Long Short. But our view at this point of time is all the 5 products or all the 7 products are fantastic. And I would say that these products have scope. Each of these products have huge scope, if you ask me, and not ordinary scope. They have extraordinary scope in this kind of a boring market from a boring cycle point of view. And I believe that that would be something which would tackle my entire growth intelligence part of the argument that you have told me to speak on. And that is what I would request all of you to do. I think the other point which I believe, which I really worry about, is that the entire risk of everything in the market is being taken by investors. And I've been saying this in other gatherings also. When I passed out in 80s and early 90s, all the risks were taken by development financial institutions. Then after some time in the 2005 cycle, all the risks were taken by banks. Today, all the risks are taken by investors. There is no funding of project finance which is happening from banks. There is no funding of project finance which is happening from development financial institutions. So everything is happening, all the risks are happening from investors. So that is why I believe that investors have to act carefully, and the RAs and MFDs are the agents of the investors. So if you invest in narrow themes and that narrow theme does badly, it is the problem of the investor and the RA MFD, not the problem of the mutual fund manager. So I would say that it's so important that you have to invest in wide themes and you have to do asset allocation and SIFs.
because that is the only way in which you can protect yourself, because the narrow themes, and if that narrow theme goes wrong, it becomes your problem. So this is the biggest challenge actually at this point of time. Just because markets haven't corrected in a big way, this risk is not been understood by the investors. It has not been understood by the mutual fund distributors. It has not been understood by the RIAs. But my biggest worry is that all the risks being taken by all the investors means that you have to do this. This is my biggest worry. So to sum up, do asset allocation, do SIP in unconstrained schemes, get SIF to be certified and make SIF a very big category in Tamil Nadu. I'm looking forward to this entire gathering to make Tamil Nadu the leader in SIFs. I hope you will do it by next year. Thank you.